Hi, I'm going to talk to you about the solution to question 7 of the 2017 exam, which is a cash budget. So here's the question that you can see in front of you. It's Whizbang Computers. So they want to expand the site of the business, fitting out the site. So that's really what the whole question is going to be about, to see whether we can afford that. So this will come in later. So you provided all this other information, a cash, a bank account, and so on and so forth. What I will do, I will by point by point include that information in the cash budget and the collections of accounts receivable schedule as well. So this is what I would do. So in the first instance, the balance is $5,800 in December the 16th. So what I would do is I've set up a cash budget template. There it is there. The opening bank balance is $5,800, and that's already working for us. Make that a little bit bigger. And now I'm going to talk about the collections. So I want to take these out because I need to put in some new figures. So let's look at the situation. So the wholesale customers can buy on credit past experience. 75% of customers paying the first, and so on and so forth. Only wholesale customers, and so on and so forth. So the credit sales are here, October, and so on and so forth. The months that we have to deal with in the question is the 3 months ending March 2017. So let's go back here. So I've got those in those months, that's okay. But here we've got to put in the correct months. Right, and it's ending 2017, but the 3 months from Jan to March. Okay, so I've got that sorted. What I should also do is to put in the name, that's Whizbang Games, so I might just put that in. Some of you tend to forget that little bit of information, and it does lose unnecessary marks. So this is our cash budget, and the collections of accounts receivable, that is linked to the collections here, which I'm going to start on now. So let me put in the details from the question. All right. So the estimated credit sales were these ones. So I'm going to copy them in there. They're ready to go. The other thing that we need to keep in mind is it's the pattern of when customers pay. It's 75 cents, percent, 20, and then 4. And this 1% is likely written off as bad, which means you don't worry about it. So we only collect 99% of our debts. Okay. So in October, the third month from October is January, so that's going to be that multiplied by 4%. Okay, that's 4%. It doesn't like it for some reason. Okay, and that is because it's got these spaces in it when I copied it from Word. How annoying. Anyway, I'll quickly sort that out. Okay, so 480, so that's 4% of that. In November, 2 months on from November is January, and that is 20%, if I remember rightly. Yes, it is 20%. So it's equal to this figure multiplied by 20%. There it is. And in February, we're going to get only 4%. There you are. And you can see here I've got my totals already sorted, so it's automatically coming in as I go through. So December is probably going to be the easiest month to deal with. So December, 1 month after, 75%. So of those credit sales in December, we're going to collect 75%. In the month after, here it's going to be 20%. and in March, which is 3 months after the event, we're going to get 0.44%. Okay, I'm just going to stop for a second and finish that up. Okay, I'm back with you. You can see that I've completed it. You can see a pattern across here. So that's the 4%, these are the 20%, and these are the 75%. 90 across there like that. And I've just totaled these up. Now those totals must go in the cash budget, and that's the reason why we're doing this particular table. So in here we can work out what the actual collections from accounts receivable is. So I simply type equals to, go back over here and drag them across. Okay, now let's just have a look at this. So what I've done, I have done that bit, and those bits. I'm just crossing those off to remember that I've done it. Now depreciation amounting to $4,000 will relate to the budget period. Now depreciation is a non-cash item. Whenever you see any reference to depreciation, I'm just going to cross it out because you don't put it in because it's not a cash item. Similarly, not similarly, but with this, we've just done that in the collections of accounts receivable, so I'm just crossing all that off. So far, I have worked through this so far. Cash sales, so I've got to put in 18, 20 and 17 into here. So put that in and you can see how my formulas are working. So now I've done this bit, and I'm just crossing it off so I'll remember I've done it. Accounts receivable are payable in the month following the purchase to take advantage of a 4% discount. So now we've got to be careful. So estimated and actual credit purchase were follows. So December 16th, 2016, 21,000. Now that is going to be paid in January. Okay. So what I've got to do, I've got to put that 21,000 into January 2017, right? But I've got to take account of the discount. So it's 4%. So 4% less 100 is 96. So I'm just going to multiply that by 96%. Okay, and I've just done this one. So January gets paid in February, which is equal to 18,000 multiplied by 0.96, and that was 17,000 equals to 17,000 multiplied by 0.96. So I've done accounts payable now, so that's all cool. You'll note that the March figure I don't account for because that gets paid in April and we're only dealing with up to March. And similarly, when I did the credit sales, March gets dealt with in April, so I totally ignored it. What else is here? So sundry expenses, all these were expected expenses, and I'm assuming they're all for cash. So we've got sundry expenses 3, 4 and 1. I'll take those out because I don't have one. That's my sundry expenses. They were 3, 4 and 1. So just put them in the right box. That's pretty simple. We've got wages, and we've got land tax to pay. But you've got to be careful with the land tax because it's just in a particular month, which is 2000 in February. So I'm putting that in. And I've got 8,300, and lastly 6,900. Okay, now I've dealt with all of that. Now I've got to come back to the top now here because there's an item that I haven't yet dealt with, and that is this $12,000. We've got the predicted cost of fitting out a new site of $12,000, which is going to be paid in 2017, and monthly rent for the new site will be first payable in February. So that's monthly. So we're going to include both the fitting and the rent. So let's do that. So here I'm going to put in another row. So the fittings, that's $12,000 in that month, and another thing that I've got to include is rent, which starts here in February, and it says per month, therefore implies that we've got to pay it in March as well. Alright, so I've got that and the rent, so it's all sorted. So I've now done all those bits, and you can see I've got everything crossed out, and I've done the cash budget. Let's just see how it's ended up. Alright, the cash budget, as you can see here, I've got my total receipts, which is added up here, the sum. My total estimated receipts is all these things together. Whoops. Okay, it's sum of all those, and they're the sums for the totals. The opening bank balances we put in 5,800. So that minus that gives us that. That's what that is. B9 minus B6, 17. So after the first month, we've got 7,220, which ends up being the opening balance of the next month. But because we bought the fittings and got some extra expenses, we had a excess. So that's why we've got a minus here. So it brought us into the minus balance here. And next month we had a small surplus or small excess, which brought it back a bit, but it's still in minus figures. Right? So that's how you do your cash budget. The implication of how that's dealt with and how that's managed is another story, but for now, that's your cash budget all over and done with. Thanks for